afternoon, everyone, for what is a boring Monday. Usually I get the fun stuff, usually I get some sort of gap in either direction, something crazy, and now the market's just died. I don't know if it's just me or if you guys also miss the coolness of the market. I miss a gap up of 2% or a gap down of 2% and people asking if we're going to get locked limit down that day. I miss all that stuff. It's kind of boring now that it's just the market's not doing anything. Right? We're up 0.05% right now, which is not even really a number that I don't think anyone cares about. So, but what we're going to do, like we always do, is I'm going to give you a little bit of my thoughts on the overall market while I wait for you guys to start putting in things into chat, because I will look at whatever chart you want me to look at and give you my take on whatever it is that you guys want to see. Again, something really cool that StockTwits is doing that I think is great, where they're bringing on CMTs, right? People who have been doing charting for a long time. We've had to take tests, we've had to write essays, we've had to have other chartists vouch for us, right? Not just someone on the internet drawing squiggly lines. And we can look at whatever it is you want from whatever time frame or standpoint you want as well. But without further ado, I'm going to start sharing my screen and we're going to get into it a little bit here as well. Let's do share and then screen and then bam, there we go. All right, so first of all, let's just take a look at the S&P 500. So this range, this kind of pink line I have here, this is the range we've been in now since May 12th, and we are June 2nd. So we're knocking on the door of a month of just sideways range-bound action. And if we look at today's candle, this line right here and this line right here is Friday's highs and lows, and we're inside that as well. So we are inside a range that's inside another range. And even if we take a look here on the 30-minute chart, we are inside of today's range. You can see this is yesterday's range as well. So we are very, very range bound. We're consolidating. I think overall bullish, to be honest. You want, after a big move, which we've had it is a huge move. You're talking 25%, I think. Yeah, top to bottom. Resting, consolidating, going sideways makes sense. That's what we want to do. So it's one of those that, yeah, I'm totally cool with it. I would be fine with this going on for another month or so. Brian Shannon always says this best. You can either resolve overbought conditions via price or via time. It looks like, at least for now, we're resolving this overbought condition via time. So sideways consolidation makes sense. If we're looking at the economic calendar, we've got some Fed guys. We got Fed Powell yapping at 1. So when I stop. So everything I say might get ruined by Powell. But we've got some, I think the most important event that we have is actually on Friday with these non-farm payrolls and the unemployment rate. I think that's what every kind of economist nerd in the world is looking at, is one of those, okay, what is actually matters? How can we boil down the economy very simply? Generally speaking, you just do that with employment. We know that the American, you guys are Americans, you guys, generally you'll spend money as long as you have jobs. So as long as employment remains high, consumer sentiment doesn't matter, really inflation we've seen doesn't really matter. You guys will just continue to spend money as long as there are jobs out there. So we need to make sure that we're not losing jobs. Now, also why it's important is the Fed has two levers that they're looking at. They're looking at inflation and they're looking at jobs, and they want to make sure that if the economy starts to get weak, they want to lower rates so that jobs will come up. And then if it gets a little bit too hot and inflation spikes, they want to pull the other lever. So, and they'll raise rates to bring that back down. So again, one of those, it makes perfect sense that that's what we're kind of waiting for. The market today in particular may just be waiting for J-Pow. So whatever happens, J-Pow may ruin or it may break us out to this new highs. And then if we get outside of this base right here, we are just, an earshot from all-time highs, like less than 3%, 2.5%. If we break out from here, gets us to all-time highs. That's like one good day or maybe 2 good days of action. So something I definitely think that we could see very, very quickly if we end up breaking out of this base. So All this is good. It's just boring. It's boring good. The other thing that I always like to show you guys is this is the commitment of traders report. So this is kind of showing the average, not the average, the net of the big guys, the large institutions. Are they long? Are they short? How is that going for them? And they're about flat. So they're not very long. They've been short all through this rally. You can see this red line here. If it's under this dotted line, that means they're short. If it's above, they're long. These guys are usually wrong. So usually they get very bullish at the top and very bearish at the bottom. They are still pretty bearish, and they're just about net even. So they are losing money as we move higher, which is great because it means at some point they need to buy. If they're short and the market goes up, they need to buy, and that advantages us that it is doing well. So that's what I think is interesting. Also, right, we had monthly candles last night, and I always like to zoom out and take a look at monthly candles just because it gives you a really broad idea of what's happening in the market and really makes this crazy tariff tantrum that we had right here completely kind of fade away. So go through these monthly charts, take a look at this. The one thing that is, I don't think worrying me is the right word, because I don't care if the market goes up or down. I just care if my trades work out. And is that Bitcoin is not participating, and it put in this little failed breakout. So tried to break out here to new highs, failed pretty quickly thereafter, after it hit new highs. And it's not really looking good. It's down, 2% today. It's not participating with the market. It can't really get going. And Bitcoin, even if you're not a crypto trader, I think is very important because it's a risk asset. It is something that moves with risk. If people want to take risk, they buy crypto, they buy Bitcoin, they buy Solana, they buy Fartcoin, they buy all these things. I would expect that if the market's going to break out, which it looks like it's going to, and I certainly hope it does, that Bitcoin should be moving with it. Again, as somebody who owns Bitcoin, I hope it breaks out with Bitcoin. I certainly do, but I can't. The market doesn't care what I think, so I have to pay attention to whatever it is that the market is doing, which is right now not participating with this rally. So my my thing is, what I'm looking for is some continuation with Bitcoin, or potentially Bitcoin to lead us lower, in which it led us higher in this area. Bitcoin moved first, so expect this to move after, and then this moves down. I hope it doesn't bring down the market with us, but so far that's the case. So we'll see. I guess there was a pretty big leverage move that happened there. Someone took like $100 million bet and got stopped out instantly, so that could have been a thing as well. So we're looking at APLD. Everyone was looking at APLD. So this is a good, first of all, a good catalyst, right? You want, so it's kind of like the 5 degrees from Kevin Bacon at this point. It's like, how far removed are you from OpenAI? So for those who haven't been following the whole chain, you have CoreWeave, CRWV, who that signed a deal or is in talks with a deal or whatever. Around, I think this day right here, it got announced that they were doing some deal with OpenAI. And the reason that's so interesting to investors and to traders is because you can't buy OpenAI right now. People want a piece of this company, but it's a private company, so you can't do it. So CoreWeave gets a deal with OpenAI. They're going to do some stuff with OpenAI. And then today it comes out that APLD gets a deal with CoreWeave. So, right, 5 degrees from Kevin Bacon here. So it's a great look. It's one of those things. I'm looking at this chart from the kind of long run, and we've got a pretty clear zone here, and that's anywhere between 11 to 12. So I wouldn't expect this to happen today. I think probably most of the news is baked into the stock. However, through this 11-12 area, your all-time highs, next major resistance is 33, and that's wild if we end up getting through that. So I'm very closely looking at this. It's in, it's right in the right sector. It's in AI. It's a massive vote of confidence to be this closely related to the largest AI player out there. I think that's a huge deal. It's, there's a million stocks that pretend that they have something to do with AI. This one's related closely to the main guy, which is OpenAI. That's the main AI player out there. So a lot of things in its favor. Now, what's not in its favor is this has gone from $3 to 10 in pretty much a straight line. So 206% in pretty much a straight line to hit a major resistance zone. It would not surprise me to maybe get a little bit more movement up or something like that, but it's a little cool off. So the question is, when we get this cool off, how much is the cool off, right? Do we crash all the way back to like 5? Well, that's not interesting. In a perfect world, we come up to 11, we hang out here for a couple days, maybe a couple weeks, and then we propel ourselves through a little later. I'm looking at earnings potentially next quarter. So that's in August. So it wouldn't be a bad thing at all if we consolidate here and then break through. But again, through that level, 33 is your highest. That's a triple from here. So something I'm watching, again, one of these little dinky companies that got a vote of confidence from the biggest guy out there. It's only a $2 billion market cap. So, right, big deal. Big deal for it, but again, overextended to hit resistance. I would not be buying it right here. I would not be shorting it by any means right here. I just don't think I would buy it right here. Kids, KIDZ. Ugh. Okay. Interesting chart for sure. From 11 quickly to 1, back to 10, back to 3. This is insane. It's one of the craziest charts I've ever seen. A blank check company that provides impressive interactive courses through K-12 students in the United States. So is this a Chinese company, I'm betting? Just because it says in the United States. But again, you've got a pretty clear area. 250 is your support. If you like it here, I think you can risk against that 250 area. You had a big push up, big consolidation here. So you got that 250 area that you could play against. It's a money loser, so you have to be careful, right? It's not losing a bunch, but it is losing money quarter after quarter. So it's not doing too well. So if we get a little bit of push up from there, then great. I'd say you're playing against that 250. If you like it, there's no real technical reason. I'm a huge fan of it here. But if you like it for whatever fundamental reason it is, or there's the fact that it's up 23% today, that's great. Just 250 is what you lean against. And I like any trade in which you have an out and then you can size yourself against that out. If I'm wrong and it hits 250 and I exit there, does that trade really hurt me? If not, take your shot, take your swing. SMCI. So again, I have a pretty strict policy that as soon as the Department of Justice gets involved in my stock, I don't like to play it. That's careful. That's just a hard and fast rule. As soon as the DOJ's kicking at my door, I'm not super interested. But I look at this the same as I know someone was looking at SOXL. I'll do a rant about that in a second, but we can just do SMH. All the semiconductors, these are very range bound to me right now. And I'm not one that I like to play things in giant messy bases like this. I'll just wait. There's plenty of things to play out there. And I'll wait until something happens and breaks us out of the base to the upside, breaks us out of the base to the downside, and then I have some sort of idea of, okay, this is a trade that I can take for now. Looking constructive, like the overall market, right? Big push off the bottom, sideways consolidation. Got a longer push to get to all-time highs. So, that's one of those things that it looks good, but just look at this massive base, right? And that's in semiconductors. That's the same with SMCI. And the reason, just so I can do my little rant here, someone's looking at SOXL for technical analysis. You don't do your analysis on the individual or the leverage ETF. You don't do it on the leverage ETF because The leverage ETF is using a whole bunch of derivatives and funny magic in order to get that leveraged. So this is 3x. So you can see how much different this looks like to SMH. And what it's trying to do is it's going to do 3 times the daily returns of SMH. And that's very important. A daily returns of SMH. And you can see it goes down over time. It degrades over time. As it's starting to push down and degrade over time, this is not a bug. This is a feature. This is how it's going to go. It's going to degrade itself down to 0. They're going to do a reverse split. It's going to degrade itself down to 0. It's because they're using these derivatives in order to achieve that leverage, and those derivatives degrade over time. So they're fine to trade. I trade them as well. You just got to understand you're trading them for the short term, and you're trading them based solely off of what it is that you're seeing solely based off of what you're seeing in the underlying. Right? So if you like SOXL, you do your analysis on SMH, and then if you like SMH, you just take the trade on SOXL and try to limit yourself to, a week, maybe a month, if that, of hold. And the higher up the leverage you go, the more and the faster this degradation happens. So you can go from a 2x is going to be a little bit better, and then the 3x is going to degrade way more. So that's my rant on those things. Again, all of these things will go to 0 over time, and it is not a bug, it's a feature. LABU. LBAU. LBAU. No, LabU. LABU. I think this is the example that I look for, yeah. So this has never been a $6,000 security, right? What happens is it goes down, and then it reverse splits, and then it goes down and it reverse splits, and it just this is how they are designed, and it will do this until the end of time, right? Because again, what it's supposed to be doing, this one is getting triple leverage on the XBI. So the XBI hasn't moved in that whole time. LABU has gone to near 0. So again, just over time. So trade your SOXLs, have fun with your SOXLs. Don't hold on to your SOXLs. Right? It's the easiest way to say it. So, okay, TA, and I will get to every ticker mentioned, assuming I have time, and I have tons of time. So I'll get there. I'm just going in order. OKTA, don't see too much here. Had a bad gap down on earnings. I'm one that I don't care about the earnings. All I care about is that the market doesn't like it. So if the market doesn't like it, I don't like it, right? It's one of those things that, hey, it's drifting down over time. I don't care what they said here. The market doesn't like it. However, long term, pretty decent uptrend from 57 to 104. So if you're looking to buy something that gaps down on bad earnings, what I would just do is give it another couple days, wait for it to build some sort of base, or wait for it to bounce, and then you have a low to play against. So, right, another good example on this would actually have been what happened right here, right? This was the tariff tantrum sell-off that had happened. If you would waited for the bounce, then you can just risk against this low. That's how I would play something like this that's doing poorly like that. So gap down, we're looking for a little bit of a bounce, and then we put a stop there at the low. But overall, I don't like, as a technician, I just kind of defer to gaps to those are fundamental traders who understand what this company does, how they make their money, and they just did not like either what they reported or what they said in their conference call, and it pushed lower, right? Like this one thing that I'm looking at now, this FTech, I've been posting a little bit about if you've been following me. I like the idea behind the company, and I've been watching it for years, and it's done nothing. And then they said something on earnings right here, and it went from 92 cents to $1.80, and now it's consolidating here nicely. So if we break that $1.80, that's going to be good continuation. I don't know what they said on earnings. It looks like they missed revenue and they just matched on earnings. But whatever they said, people liked. Right. So this is why I don't care about the move. I care about the markets or the news. I care about the market's reaction to the news. And this is one of those, the market reaction to the news seems bullish. Someone's selling a crap ton here at 180, but if it gets through there, I like the look of something like that because, again, we've had that post-earnings move that tells me that the nerds that actually listen to the earnings report like a look of. eToro. So here's one that's interesting and a good lesson for everyone. 80+% of IPOs at some point undercut their IPO price. I think at some point within the first year or 6 months. Someone wants to look it up and correct me, more than welcome to. But the point is that in most cases, there is an undercut of the IPO price and then look to rally back through. So what I generally do, a trading style that I like to employ on some of these ones is just to take anchored VWAP and slap it on there. And if we get through that anchored VWAP price, that is my purchase. My stop loss goes under whatever the low of the swing low is if I like this as an investment. So I don't really know too much about it. I know this is like a trade copying service, been around for a long time. So I've been hearing about these guys for ages and ages. So it's definitely a established company. It's worth around $5 billion, it seems. I saw them all over the Stock Twits events when I was there because I think they were sponsoring that. So thank you for them for that one. But yeah, IPOs right here, sells off a little bit, just perfectly per normal, right? Not Facebook anymore. God, you're old. It's Meta. You can see all of these, right? So there's Facebook. So imagine you did the same thing. You really liked Facebook. If you had bought it on the IPO day, it just collapsed after that. All right, maybe you took one shot in through here and you got a little bit of a stop out and you took your next shot right here with a low down here. You were in Facebook from $20 and now it's up 664, again, assuming you had the guts to hold it that long. A lot of them, again, 90% of, or 80 to 90% of IPOs undercut their level. So ETOR was the, right, eToro. So that's the game plan I have here. You can just add an alert to these if you're on TradingView or TrendSpider or whatever. You can just add an alert for that and say, hey, if it gets back through there, buy some, put a stop at that low, then let it go. Right? That's the IPO way that I trade personally. Another one that I did that on that I can talk about here is SMR. All right, here's the SMR price. I didn't even know about this thing until kind of right in here. I think a buddy was ranting about how these nuclear reactors were going to be amazing. So I bought some at 6, and then my stop, I think, went at like 4, and I'm still in a little bit of this. So an amazing trade. So whether or not they're going to continue, obviously that much has something to do with fundamentals and things like that. But just, if you're looking for a way to potentially not get caught up in the hype of IPOs, because there's a whole apparatus that very much hypes up IPOs. They have to. It's like the point. It's one of those that, you have to make sure that you are keeping yourself sane, right? You're keeping yourself level-headed, and then you have a plan. So that's how I develop a plan on IPOs that I like. Yeah, that's the way that I look at it personally. Lulu, earnings up or down, I don't know. Technical analysis didn't help us there, right? Technical analysis tells us to stay out of earnings. However, right, if you had to do an assumption here on Lulu, I think it has to be bullish. Now, zoom out on Lululemon. It's done absolutely positively not a single thing in this 2020. So 5 years of nothing. If you invested in Lululemon 5 years ago, you broke even. And I don't even think no dividends. So you haven't even got paid to sit here and do anything. So this is a company that's obviously struggling with quality, identity, whatever you want to call it. They're obviously struggling. Now, short term, the most recent move is higher. So we've moved from 250 to 3. We've been consolidating nicely here, but that kind of lines up with the whole market that has been consolidating pretty nicely. So we're just kind of in wait and see mode when it comes to Lululemon. Now, the technician in me says you want to bet on the direction of the underlying trend, which in the short term is higher, in the long term is nothing. So it's probably what's going to happen with Lulu is up to zero. But these are binary events in which you can't really predict, right? So generally speaking, technical analysts will just stay away from earnings and then figure out what happens after earning. What's the market reaction to it? This Path company was another request here. PATF, PATH. This one looks really bad. From $80 down to 12. Big gap down on, was this earnings? Yeah. So whatever they said on earnings, no one liked. Tried to gap up on, a couple days ago on earnings, and then just completely fell apart. So people are using every excuse in the world to sell this thing. Every rally that happens in Path is just getting completely and utterly sold against. So there's nothing here that I see from a bullish standpoint in Path at all. Couple ways to play it. If you really liked it, you can do another anchored VWAP off this swing low, and maybe if it kind of finds some support around this 1150-ish area, maybe you take a shot there. But yeah, I don't like this. I don't like that the initial move was a gap up that got everyone excited, and then the sell-off essentially means generally there was like an earnings call that happened. Sometimes you have the reported earnings that get everyone's hyped, then they get on the call and they say, hey guys, things aren't looking so hot. And then you have the kind of collapse that happens after that. So it tells me that people are working large orders to get out, not to get in this one as well. So okay, TSSI. This has been ranted about. Yeah, it's a good looking chart. I have no idea what they do. AI demand. So this is what I talked about on. I have no idea what it is. I have no idea anything about it. But after this earnings play right here, we had a gap up. So, when you gap up on earnings, it just shows that this is one of those names that whatever it is that they said the market likes, and whatever it is that ends up being whatever it is they said, not only did they gap up and they liked it, so far they're holding. So unlike that Path that we talked about, had gap up and just completely fell apart right off the gate, just tanked entirely. This one gapped up. So far, it's holding strong on that gap up. That's all good things. That's all things pointing in the direction of this name. One thing I will say, although the chart does look very, very good, it's a $350 million company, so be careful, right? Those things are insanely speculative. When your market cap is that small, that is a hugely speculative company, so something incredibly bad could happen quickly. It only has 13 million shares total in the float. So again, just be careful. But just technically, this is a cup and handle as standard as a cup and handle comes. You have this high that was made a while ago at $17. You pulled all the way back to 5. Again, just note that these small companies, they can do this up and down. So just be careful. That was, you lost 2/3 of your money if you had been holding on for that price. Comes back to that area and then starts to consolidate sideways. So I think the play here gets pretty simple. If you like this as kind of like a momentum play, you probably want to own it if it gets through this $16. You probably want to put a stop loss at 11. You want to make sure that risk makes sense to you. That's something that you can handle. When it comes to these lower float companies, have some sort of understanding of what they do. This is saying that it's AI demand, and I think we've gotten some crazy chatting about AI demand too. That means it's going to move with the AI craze, right? If AI is going to be in favor, it's going to move great. If AI gets out of favor, it is going to completely reverse and tank much lower. So, right. Very speculative play, very nice looking chart. Again, I love gaps because gaps show emotion. They show generally a catalyst or a news event or an earnings event that has changed the way the stock moves. And then what happens after that gap is very important because, again, not to pick on Path, but Path gapped up, very nicely. Like this is a big gap from here to here was a 16% gap, and then just completely fell apart and is continuing to fall apart here. So you want to see what happens after that gap, and that TSSI gapped very nice and move from there. TFD. DFDV. DeFi Development Corp. So it's going to move with crypto, but very interesting. Right. So anything DeFi related is going to move with, Ethereum and Solana. Nice looking trend. Right? Broke out of all-time highs a little bit ago. Now it's a nice orderly pullback. So, right, you could watch this $15 area, see if it pulls back into that zone. Again, this pullback's huge because this is another really low. This is a good example with that TSSI. This is something that can happen very quickly. This is a $50 or $60 stock to 20 in 4 days. If you're trading a tiny market cap company with only 14 million shares in the float, they can do this. They can go up a couple 100%. They can go down 90 some odd percent with no rhyme, reason, order, respect. Just gonna do it. For those who don't know why, I guess I should just specify that the smaller float your company, the less money it takes to move it. Right, this whole company's worth 200 million shares, and there is only 14 million shares in the float. Right, so let's say this has already done 1 million shares today, so it's done 1/10 of the entire company has traded hands. That will never happen in Apple. Sometimes you see those numbers flip. Very commonly, you'll see numbers that, hey, this company has 14 million shares in the float and it's done 30 million shares today. That means if we were all sitting in a room, we've all passed the company around twice, which is it's insanity. So it's speculative on the way up. It'll be speculative on the way down. That's why you want to look at float to size accordingly. And a 21 beta is pretty insane. So again, it's one of those. It's going to move with crypto, right? Crypto's down, so it makes sense that this thing's down. If it's doing DeFi stuff, it's going to be the same as all of these weird companies that have decided to YOLO into Solana as their business model because their business is failing. Live by the crypto, die by the crypto. CYDY is a pink sheets, right? So this company is so financially bad, it cannot be listed on the NASDAQ. And that is a fairly low bar to not to be able to be listed on the NASDAQ. So that doesn't mean it's a bad trade. That just means it is a bad company. And those two things can be very, very different. It's health technology. It's gone from $9 to here, where it is now can't be listed on the NASDAQ. So it doesn't mean, it's a decent looking chart. I'm not big into OTC stocks. I don't trade them very often. If I do, they're very short-term trades, because if you cannot get listed on the NASDAQ, which there's a lot of junk listed on the NASDAQ, it's one of those things in which it worries me, right? So just be careful, right? These things can go to zero very, very quickly. However, it's a decent looking chart. So if whatever they've got on the horizon you like, this is one of those, because it's hemorrhaging money very quickly. I think you just need to understand that it has a billion shares in the float. Holy smokes. Whoa. So yeah, this isn't something I would hold for the long term. Have fun if you do. It has a billion shares in the float. How many shares does Apple have? AAPL. Why can't I? AAPL. 14 billion. So this company has 1/14 the float of Apple. So it's a large float. I guess I just said that was a good thing. Just be very careful, right? That large of a float on something that can't stay listed on the NASDAQ, that's all very, very creepy to me. So I'd be very worried about this one. Root. ROT. I am Root. Financial insurance brokers. It's from $3 to 139 in pretty much straight line. That's looking good. Tight consolidation here and getting tighter, and that's also a good thing. So this is probably, I would say, the best looking chart I've seen for a company that's actually making its shareholders money. It's returning money back to its shareholders. It's not going to go up 1,000% overnight, but this is a good looking chart. So I would just draw out this consolidation that's happening here. If it can get above that around 145, that's potentially where you could take a shot. You use a stop at 125 and just take that trade. It's good. Again, I say boring, but hey, it was a $3 stock at one point. It's 139 now. So it definitely can move for sure. Low float. See, 9 million shares in the float. Now, again, for reference, that CYDY had 1 billion shares, 1,000 million shares. And this has 9 million shares. So that makes sense to me why it's moving quite a bit more than you would expect from insurance broker services stock. All right, let's keep going. Marvel. So Marvel's going to move with kind of the rest of the whole semiconductor thing. This is worst of breed when it comes to semiconductors. I always want best of breed, especially if the whole sector, we talked about this, semiconductors, the whole sector is range bound. I want to buy the best semiconductor if I think they're going to break out. This looks like one of the worst, only rivaled that by Intel, which is the worst semiconductor out there. AMD, I see, is the next one here. This one's a little bit of a middle ground. AMD has very recently broken this downtrend that it's been in for a very long time. Very recently kind of gapped up and broke that downtrend. So that is something that is interesting that it's been able to do that. So if the semiconductor base can resolve higher and the market can resolve higher, maybe this one can resolve higher as well. It's just so tied to that semiconductor base that it's one of those things where it's going to be really, really hard in order for that to move without the rest of the market moving, right? Because it's stuck in a base. It looks like a lot of the rest of that market. Google, the old Goog looking good. Google is very interesting because, you see how I have this drawn out, this massive support here at 150. We broke this little zone right here, and now we're pulling back. This is worse than a lot of the Mag 7. So MAGS, for those who don't know, is just an ETF that tracks the Mag 7. Google is worse than most of that, but is something interesting. Something interesting to have, just to note that it's not doing nearly as well as the rest of them. We could talk about, are people going to use ChatGPT more than Google? I do. I don't go to Google anymore. I use ChatGPT or Perplexity for all of my searching now because it's just better and it can link me to things better. But so I don't like to buy laggards, to be honest. However, if you want to take a shot, you've got this insanely huge level, just $20 below you. So if you're taking a long-term kind of investment approach, you say, hey, I'm going to buy it here and I'm just going to risk to 150. You're risking $20. You think the chance you can make $40, which is going back to highs? That's 2 times your risk. If you're right a very small amount of the time and you make twice as much as you're right, then you lose when you're wrong. You do just fine in the long run. TGTX. So I also have this one. That's what I love about TradingView is I can come back sometimes months or years later and just see, okay, this is what I've drawn out on this one. So I don't need to go and redo it. It's obviously got a very important zone that it's dealing with right here. Broke out, came back. Any of these therapeutics companies, I think, are interesting to keep an eye on because a lot of them are getting beat up, right? Healthcare. XLV is getting just shellacked. So when I see something like MindMed, which is something I'm an investor in, full disclosure, doing well, a nice uptrend and breaking higher, I think that's great. When it's a TGTX, which is doing well, but has just pulled back recently, I think you continue to play against this level that I've noted, right? It's about $35 or so a share. It's just the low of this, anywhere between 32 and 35. If you like it, there's your out. If you lose that, that means that this whole thing was probably a failed top, and it might continue a trend lower. If this holds, then you've gotten pretty good price at a support price, and you can take the trades from there. So, yeah, the more I see this TSSI pumped, the more I'm like, ugh. If you have to pump it, that makes me worried. The chart did look nice, but if you have to pump it, then I'm like, eh. JJ's Snack Foods Co. Big level support here at 112. I don't know why. It's just absolutely collapsing. Do they get their food, specialty food, candy? Do they get their food from China? Is that what's going on? They're constantly missing earnings. Right? If you look down here, constantly missing earnings. So missing both estimates. So this is the actual, yes, the estimate is missing a lot of those earnings all the time. So that's not exciting to me at all, right? But this is a big support area. If you want to just buy support, buying support is good in the sense that your risk reward will be tight. The fact that you're right, betting against a trend like this is going to be very low. So you're probably going to get stopped out. This thing is probably going to go lower because it went from 180 to where it is now. It's interesting. See the old Campbell soup. So for those who don't know, as a boomer, I'll tell you, Campbell soup is one of those, it will go up when the market is, people are terrified of the market, and it goes down when people are more sure of the market. So you buy Campbell soup not because the chart or not because the investment. It's just one of those, if bad economic numbers come out, generally Campbell soup moves higher. And, you can see here during the tariff tantrum, it didn't move. That's why people buy Campbell soup, not because they expect to make money in it, because it's somewhere they put money when they have to. So this is another one that's not looking too good. IBR. I'm loving all of these symbols, just by the way, guys. It's so cool because I can steal your guys' work and I make notes of, that's why I might go silent for a second every now and then. I'm probably just making a note of something that I liked. IBRX, this is one of those biotechs that is not holding up very well. This was $30 in 2021. It was $10 and now it's $3. So it's on the low end of its range. It can barely hold on here. So this isn't something that I'm super interested in, but you had another one here with Hollow, and this is one of the worst companies I've ever seen. Wow, holy smokes. So for record, for those who don't know, this was never worth $100,000 this company's a scam. I'm sorry, but this was never worth $100,000 a share. Just never was. What happens is they sell off, and like we talked about, if you have to stay over $1 to stay listed on the NASDAQ, so they do a reverse split. This is one of those, only 4 million shares in the float. The average volume is 4 million shares. So this is purely a speculative day trading vehicle in which people get it, probably a chat room or something, gets it all hyped up. It goes from $6 to 12 and then right back down to 6. And you can see it does this all the time, where it goes and reverse splits and then crashes back down and then probably does another reverse split and over again until it gets bankrupt. The only one that is more of a scam than this is this car company that's never made cars. That is, I think that was 600 like quintillion is its all-time high. And people will look at this and then say, the shorts are out to get my company. Like somebody's shorting it from 600 quintillion down to $5. It's just, again, they did a reverse split recently, so they'll perk up for another couple days. Every now and then a chat room will just pump it. So they all get together. Just it's nothing. It's same as the meme coin thing, right? A big chat room will get together and say, okay, let's all, right, 1, 2, 3, buy, and they all buy a bunch, and then it spikes, and you get all these people who are thinking that this company may come back one day, which is, I'm sorry, if you think this company or Hollow is going to come back to where it was at any point, I'm sorry. I don't know what to tell you. I'm really not trying to be mean, but they, yeah, they're scams, right? Or like there's no other way to put it. This company just hemorrhages, lose $400 a share. This is a design to take money from people who believe in hype and yeah. So now watch me say that and it be the bottom of the stock. So could this thing get back to like $10? Yeah. Is it ever getting back to $100,000 a share? Absolutely not. Right? It would be what, 4 million times 100,000. So that'd be, geez, I don't know. That would be the wealthiest company on planet Earth. That would probably be all of the money. 100, 1, 2, 3. It's, yeah. What even is that as a number? Hold on. I'm just very curious right now. Yeah. How do you say that in words? Yeah, it'd be a $400 billion company for it to get back to where it was. $400 billion company. Yeah, so no way. CNC. Again, not trying to be mean, just there. I know there's probably somebody who's like stun locked in this thing. Take your tax locks and not investment advice. I'm not a financial advisor. If it was me, I would take my tax loss and move on with my life. Put that in the, I made a bad move. I got caught into something that's insane. CNC, it's at support. Like same with like Lilly and a lot of these health companies, they're all at support. It may be time to take a shot on them. It's just if you look at XLV, it's barely holding on by a thread where the rest of the market's been up and holding up pretty nicely. I just think, I don't know if it's that RFK guy that you got down there. Again, I'm Canadian. I don't really pay too much attention to this, but I don't know if that's if there's some sort of tariff thing with healthcare, but everybody's worried about healthcare stuff. And until whatever that is seeming politically gets worked out, this is a very hard place to buy. Now, someone, again, full disclosure, I own some Lilly from an algorithm I have at a, I think somewhere up here. And then I bought in more down here. But, a lot of good support plays going on in the health sector. It's very, very hard because it's just not participating nicely. IONQ, the quantums. I own one quantum computer, QBTS, I think it is. I can't remember. They're all the same. They'll all move together. Gap down today. Doesn't look great on a very short-term chart, but this is a nice kind of potential cup and handle style action. So I like the look of this. I think it's constructive. I think you potentially use like the low of this. I've seen an elephant bar, whatever you'd like to call it, right? 33 as if it breaks that, it's probably really rejecting this prior high. But that seems to be what happened. It shot up to that prior high, and there seems to be some sellers up there. So ideally what you want to see is a shallow pullback and then a push back through all-time highs. So if it was me holding this thing, I'd be watching this kind of $33 area. If we let go there, I would get out and then look to get back in later. INOD. Going a little quicker here because for the first time ever, I may run out of time, which is awesome. It's great. INOD, InnoData. So this one's overall good, right? So it's a nice solid uptrend. It's done nothing for a while, but I like the fact that it had this nice gap and it's just been holding this gap right here. So it looks like we might be breaking out of a little support level at 41. So then we kind of target 60, which is great. And then your risk is 30. That's a great risk reward, right? You're risking 1 to make 2. You don't have to be right very often in order to make that work. It's a nice look. It's in technology and data processing. That's another nice sector to keep an eye on. Yeah, so I would watch that closely. That's a nice look. You need some catalyst to kind of break it out of this range, though. It's been here for a long time. When a company's in a range for this long, it means that they just kind of found its fair value and it's just chopping around there. So, but it's a nice look. ATXG. That's another one of these. Not as bad as the other ones, but you know, it's going to have to reverse split soon in order to stay listed on the NASDAQ, unless it can't get going above this area. As long as it's in this base, I wouldn't be too interested. For me, I would just set a kind of an alert right here at kind of 120 and see if it can get through. Right. Same with, not to just keep bringing this one up that I'm watching, this FTech here. Same kind of thing, right? When it's down here, challenging under $1, I start to get worried that, hey, maybe this thing that I'm watching will get delisted. As it rallies back up through, then those delisting concerns, at least for now, are gone. So this becomes a much more constructive base. I'm okay if I were to miss this move in order to get this consolidation. Then if it breaks 180, then you could potentially have another move from there. But when it's under that, and it's under that for some time, they're going to have to do another reverse split. And you can look, this little S right here, this is the last time it happened, and then it fell apart, and then it did another one right here, and then it fell apart again. So far, reverse splits for this company has not been a buyable event at all. MP Materials. Materials are weird because they had that Trump news that people seem to be kind of fading. This one is another range-bound type of name. And if you look at something like a CLF, right, that gapped up and it's holding the gap-ish for now, but this one, it gapped up today and it could not hold the gap at all. So it crashed right back down. I don't like that when you have a gap up and then a complete rug pull right off the bat. Generally means that there's either some like positive news event came out and then a negative news event came out, or that positive news event was something that there was a big player looking for that liquidity in order to dump into. To me, that's what this chart looks like. It gapped up, it had a rally on Friday, and then it gapped up here, and then everyone's saying, okay, now I can finally get out, and right, not what you want to see when it comes to different companies. DGXX. Yeah, another one of those. Right, $28,000 stock. Was never a $28,000 stock. It's down 99%, losing money on every quarter. Yeah, hemorrhaging money, and is threatening that dollar mark. So if you want to take a shot on it in this DigiPower, maybe you do against $1. You say, I'm going to buy some, and if it stays under $1 for too long, if it gets under this zone right here, I've got to go. It just, if you can't get your company compliant on the NASDAQ, which is the easy exchange to get compliant on, I start to get very, very worried. So, they beat kind of on earnings, but yeah, losing 42 cents a share and you're a dollar company, that's worried. That's worrisome there. Marvel, we already did. APLD, we already did. Again, I'm looking through. You can see APLD. That's basically my summary on it. I wanted to get through that level because if it gets through there, then right, it's a pretty clear shot to 20 and then a pretty clear shot to 30, which is a double and a triple. It's a big move to get there. You don't want to be the smart money's exit liquidity by buying after a huge spike. That's like one massive takeaway. That's why, again, just using this as an example, I won't even bring up the name anymore, right? I don't want to buy after this huge spike. I want to wait for something like this to occur, and then if it pops through, then I can really step on the gas with this guy because I know that there has been some digestion. Anybody who wanted to sell this probably has sold it because it like doubled. That consolidation is again what you need. So APLD, I just worry that buying it up here is buying that huge move, And then what you're hoping for is a small pullback or some sort of consolidation. This is one of those things that feels like FOMO at this point to get back in. CR, yeah, CrowdWeave is CoreWeave is very interesting. It did the undercut of the IPO price, which a lot of like 80% of companies did, and then just ripped. So now it's consolidating nicely. Feels overextended, but overextended can get way more overextended. A perfect world, I think, is a sideways consolidation for a period of time and then a break. It feels overextended to take something that's gone from 30 to 120 in an absolute straight line. CRDO. Almost not. I don't see really anything here, right? We're stuck in the middle of this range. It's a big range from 29 to 80, and then it's stuck inside a smaller range from 65 to 56. So past move was good from 30 to 60. Now it's consolidating sideways. That's a positive. Nothing really is showing for an increased move higher here. Just nice, slow, steady uptrend, which isn't a bad thing. It has earnings tonight, so be careful. But that explains the consolidation over the last few days here. It's because people are waiting for earnings to get out. Now, I'm not one. Again, no technical analysis will tell you what's going to happen with any certainty in earnings, but we know that often surprises happen in the direction of the trend. You can see gap up here and a gap up here, and we are in the direction of the trend. So, again, better shot than not, but not something that I would definitely, I wouldn't take as a trade. Just YOLOing something into earnings, especially with options. A lot of people get trapped into that, right? Most options with volatility crush really, really go down really, really quickly. So, make sure you're careful about that. Right, you're not YOLOing into earnings there. Cancel. There we go. KLUR. KULR. So I already have this one drawn. It seems like a buck is a magnet for this. Every time it pulls off a buck, it comes back to it. And we talked about why $1 is very important. So again, if you want to take a shot, I think you're buying it around a buck. And if it loses a buck, you probably want to get out. Again, if it was me, not investment advice, just because again, if you're that dollar, you're kicked off the exchange if you can't hold that dollar. ALT. Yeah, it's another one of those that has to continue to reverse split in order to stay listed. So that's not an interesting one. Just going a little faster because we're actually running out of time. GLXY. That's again, we can do Galaxy Digital. We can do the same kind of idea here where, what was it, eToro that just IPO'd. And we know that again, 80% or so of stocks undercut their IPOs. So we slap a VWAP on them. This is again how I trade them, not investment advice. So you're waiting for it to get through this anchored VWAP from IPO, and you're putting your stop at the low there. And then you kind of hope it happens, hope it breaks from there. Again, it's a very simple way to not get caught into the FOMO of IPOs, because I keep repeating that stat that most undercut their IPO price, just so that people don't get super excited to YOLO in after an IPO. And then because after it cuts, as opposed to waiting for it to break highs or something, you're saying, okay, the VWAP is important because it's the average price, right? It's the average price of this particular security, the volume weighted average price from its inception of this particular security. So if it gets above that, people are starting to get a little bit happier, a little bit more excited. So, okay, everyone. Well, thank you all for coming by. I greatly appreciate I appreciate the number of symbols. It's been absolutely fantastic. So I'm able to kind of hammer through symbols and come up with a watch list of things that I like. Appreciate everyone for coming by. As always, just a reminder, we are hard stuck in the middle of the range of the market. So don't get too excited one way or the other when we're stuck in a range like this. Take a breath, right? Take a walk, wait for the range to resolve before you get too excited. And I will see you guys on Friday.